Hello and welcome to today's NinjaTrader Ecosystem webinar event with Trisha of Easy E-Mini Trade. My name is Tiffany and I am a platform representative at NinjaTrader. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your circumstances and financial resources. It is possible to lose all funds deposited within your broker and can even incur losses beyond these amounts. Please inquire at the link provided for more information or for the copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply education in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader ecosystem on all social media. NinjaTrader is always free for advanced charting, strategy, backtesting, and trade simulation. To ensure you're on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. If you're just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We're very excited for this unique event in which Trisha of Easy E-Mini Trade will demonstrate using volume profile to establish support in resistant areas. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Trisha. Please take it away, Trisha.
Okay, hey everybody, hope you're all doing well. Let me just get the correct screen to share here, and hopefully you guys can hear me okay. All right, a lot of you guys are familiar with me and my setups, and this is one of my favorites, and I'm not going to waste any time so we can just jump right into it. What I'm going to do is I'm going to go over the 1-minute setup presentation slides, and then I'm going to just go right to charts. It's just a lot easier. Somebody's saying they don't see my screen. Do you guys see my screen?
I see your screen, and it looks great.
Perfect. Okay, great. Thank you so much, you guys. All right, so let's get going. So I have a handful of setups that I love to trade every day, and I think it's important to have a few setups that will take you through many different trade environments. So typically, I like to trade off a range chart. That's my favorite, but especially this week and last week, I'm sure many of you have noticed, obviously, the increased volatility. And so if you're someone who, like me, likes to trade off the range chart, it can be very difficult getting those orders in fast enough, etc. And so this is where a 1-minute setup can come in handy because obviously each bar is going to form after 1 minute, where a range bar, if you're not familiar, is based on strictly price action. So let's get going here. So 1-minute trade setup. So as I said, I'm going to go over what I like on my charts. I'm going to go over the settings on the indicators, and then I'm going to just show you examples from today that would have set up. So areas that I like marked on my chart. Now, I'm a firm believer that truly, if you become good at establishing support and resistance areas, you can make any setup work. And what I mean by that is if you're going in short and you're literally on top of support, then you're going to have a hard time likely, gaining your ideal profit if you're hoping that price can bust through a support area or vice versa through a resistance area. So these areas are reference areas that typically you'll see price will react without you having to do much in the way of drawing support or resistance lines. So I like the floor trader pivot points on majority of my charts. On NQ, I just plot the pivot point, and this is an indicator that you'll find in NinjaTrader 8. I believe it's called daily pivots in NinjaTrader 8, and I like to plot the previous day's high, low, and close. And I use the Globex hours, and I'm Eastern, so for me it's a start time of 6 p.m. Eastern, and an end time of 5 p.m. Eastern. So for example, tonight at 5 o'clock, the market closes, and then 6 o'clock it will reopen, and that will be the start of tomorrow's date. So I like the high, low, and closed indicator using those hours, because then my indicator will match what the settlement prices are at Globex. I like to have the 50% Fibonacci retracement area on my chart, and I'll use those same hours that I just mentioned, as well as the regular trading time of 9:30, starting there with the range. And the reason I do that is generally you're going to find that price is going to react there. And then I like a large moving average on my charts. I got a 200 and a 90, and once again, these are areas that price will likely react. And then what I do is I mark major support and resistance areas off a 15-minute chart, and I just leave them on there, because you're going to find whenever price finds its way back there, price is going to react again. And then I'll mark the areas that are created intraday. And again, reason for this is not so much that you can't take trades into support or into resistance, but it's nice not going in blind and not having any clue why price is getting stuck and not moving. So if you make a decision, for example, to take a short into support and you know it's not getting through, then you can get out. Whereas if you have no idea support is below you and you're sitting there, you know, hoping and hoping and hoping it gets through, and then you wind up, you know, it bounces off support and then stops you out. So at least if you go into a trade with your eyes wide open, you can pick realistic targets based on support and resistance, and realistic entries based on, you know, how much grief you want to put up with. So the 1 minute setup, showing you, like I said, on a 1 minute chart, you can use it on any size or type chart that you like. And the main indicator on this, there are actually three, but the main indicator is the super trend stop. And I did include a link here. I don't know if you guys, you're not going to have the slides, but you'll be able to go to the forum and just search for the super trend stop. And I've said this many times before. I've used this super trend stop, gosh, I can't even tell you how many years now. I'm going to say 6 or 7 years. And it's my favorite indicator. If I only had one indicator that I can ever choose for the rest of my trading days, that would be it. So again, obviously, it's one of my favorites. And so the settings that I use for that are as follows. And again, you're going to have the recording, so you guys can look back at the recording and check these out. But the main one that you want to be aware of is that I'm using EMA as the baseline smoothing, and then I'm using true range as the offset. And then these are the settings right here: 8 for baseline period, 1 for the offset multiplier, and 15 for the offset period. Now, what I will say is if you want to trade this on a range chart or a tick chart, I would recommend using the settings of 3, 3, and 3. Okay, so if you wanted to check that out on anything other than a time-based chart, that's what I would recommend, 3, 3, and 3. But for the purpose of this setup, 8, 1, and 15. I choose not to show the arrows, and I'm choosing not to use the paint bar. The paint bar will color the bars all one color when price is plotting above the super trend stop, and all one color when it's plotting below. So it's totally up to you, you know, how you want to use that. I will say that the sound alert is not working in this indicator. So, you know, unless there's a more recent update in the forum. But if you find that you're not getting the audio alerts to fire off, I think there's a little issue with it. But like I said, these are the main settings. And the other two indicators that are going to go on this chart for the purpose of this setup, we're going to use 2 stochastics. And we're going to use 2 fast stochastics, and they're both going to be overlaid into the same panel. They're both going to be, in the instance of this explanation, they're going to both be in panel number 2. And the settings are, for the first one, period D, 6, period K, 13. And then you're going to notice down here, D is going to be my green stochastic line, and then K I just make transparent because I don't need the K line. And in here, when you open up the lower and upper here, I want 80 for the upper and 20 for the lower. So 80 is going to be for overbought, and 20 is going to be for oversold. And then the next stochastic, also fast stochastic, is going to go in the same panel as the first one, panel number 2. And the settings are 13 for period D and 25 for period K. And just like the last one, panel number 2, and I already am going to have my upper and lower lines being plotted from the first stochastic that I put on here, so I don't need to plot those again. And this time, my D line is going to be my red line, and K is going to be transparent. Okay, so what you will wind up with is something like this. So the two stochastics are down here in the lower portion of my screen. And I'm just going to go through and tell you what's on here. The white line here, when I show you my charts, I've got actually a white chart, so this will actually be black in the screen that I show you on my actual charts. But this is a 30 EMA, the white line here. The yellow is my 90 EMA, and then the red is my 200 EMA. And then these square dots that you see here, that's the super trend stop. So you can see the pink dots below, the white dots above. So that's the super trend stop. And then as mentioned, I've got my two stochastics on here, and here's the green one, here is the red one. And surely you can see that. And then over here on my left, I've got the volume, the order flow volume profile. Now, if you're not using the NinjaTrader lifetime license, then you won't have access to the order flow tools. So I'm just going to put that out there. So if you're looking for it and you don't have the lifetime license, that would be why you can't find it. All right, so I'm just going to go over quickly the setup, and then we're going to look at some charts, okay? So it's really easy. Basically, what I'm looking for is, as price is getting above the super trend stop here, I want my stochastic to be in line, and that is going to be my filter. So if the green line is above the red, I'm looking for buys. If the green line is below the reds, I'm looking for sells. Now, the exception to that rule is if the red line is in oversold, that would be under 20, then no matter what the green line's doing, I'm still looking for shorts. And over here, you can see if the red line is in overbought, which is above 80, no matter what the green line's doing, I'm looking for buys. And you'll see this. The stochastic settings will be the same no matter what size or type chart you put it on, KW. And these are for NinjaTrader 8, and so that's what we'll be focusing on today. And I'm sure that you can find them in 7 run, no problem. Okay, so as price is getting above the super trend stop here, I want my green line to be above the red. As you can see it here, it's valid for the buy. And so what I generally do is on the time-based chart, I don't usually wait for a close above or below the super trend stop, as long as I've got room up to resistance or down to support. So I can just place my buy, I use buy stops and sell stops. So if I wanted to take this, I would put my buy stop a tick or two above the super trend stop because it's valid here. And then if I wanted to take this short off the 1 minute, I would put my sell order in a tick or two below the super trend stop. You can see it's valid here with the green line below the red. Now what I want to point out is you can see here that price is attempting to break through this super trend stop right here. But at the time as it's doing that, what would prevent me from placing an order under there is that at that time my stochastic is still, the red stochastic is still in overbought, so I'm not going to be looking for a short yet until that comes out. So as long as that super trend stop remains there, until price closes below it, I still have the capability of this stochastic getting in line and for me being able to take that trade. Now, if you want to be conservative, you can wait for a close above the super trend stop or a close below. That's totally up to you. And, you know, you might have different rules for different types of environment, but typically I'm not usually waiting. I'm not going to say I never do, but I'm going to say 99.9% of the time I don't wait, as long as I've got room up to support, up to resistance or down to support. And so over here you can see price breaking the super trend stop here. So this buy technically would not be valid because my red line is in oversold. And you're going to find that often you might be in oversold and price manages to get up to resistance. It's totally up to you. I'm giving you the way that I like to trade this. That does not mean that you can't fine tune it and make it your own. This is going to be on a 1 minute chart, Ashley. Okay, and so let's get going here. So I am going to just close this down and we're going to get right to it. So I'm going to start on NQ. That's the easiest. I mean, that's what I've got up. And I'll change to YM and ES. And you'll notice here I've got the volume profile over here on the right. Here's the super trend stop. And one thing I want to point out, if you weren't aware and you're not familiar with the super trend stop, is that it is only going to plot on one side of price or the other. And what I mean by that is you'll notice here, for example, when price closes above the super trend stop, then the super trend stop will start to plot below price. Here you can see when price closes below the super trend stop, then it starts to plot above price here. Okay? So the way that the super trend stop works, now I'm just going to explain it just a little bit. It's been around for a long, long time. I didn't develop it. I didn't program it. I just, like I said, I came across it quite a few years ago and have just made it work for me. Probably not the way it's intended, but mainly this is to be used the way it was programmed as a stop. And so like if you were short, let's say, you could trail your stop just above the super trend here as price is going lower. And then if you were long, and then you can just trail your stop under the super trend here. So many ways you can use it. That's how I'm using it. So a couple things I want to show you here. This, the stochastic that you're looking at down here are stochastics that are programmed by Gordon. He's somebody that I know. He's been in my room forever, and we've known each other for many years, and he programs these simple indicators for me. And so he has it so I can easily see what direction I'm looking for here. You can see it's telling me short, and it's short because the green line's below the red. And another indication that we get from the stochastics are when we get these big spaces between the two stochastic lines, that's usually a good indication that price is going to stall or basically move in whatever direction the green line would have to go to find its way to the red. So that's really helpful. A lot of the times, let's say you're getting ready to take a short and the stochastics here are telling you that it's probably going to get ready to bounce, then it doesn't mean you can't take the trade, just means that you're going to be aware for the possible stall or bounce. Now on a range chart, you'll find that it obviously moves a lot faster. So you could actually make use of that stochastic, the space in the stochastics there, like shorting at resistance when you get like the 40 point or more gap. That's usually what we use is 40 points or more. So if we were at resistance with a 40 point gap, giving us a heads up that it's going to go realistically lower, because what direction would the green line have to go to find its way to the red? Down. So if we were at resistance and we got something like that, we could be aggressive and short, short it. And if I was at support and I wanted to try to buy it and I had the 40 point gapper to the upside, for example, then I could buy it. Now, in the volatile market that we've had, I would be very cautious about anticipating areas of support and resistance holding, and being obviously cautious on shorting resistance, buying support, just because of the whippiness this morning. Now, I didn't trade this afternoon, so maybe it was less volatile, but this is most of the time a really good tell that the market is going to stall and, or like I said, move in the direction that the green line would have to move to find its way to the red. Okay, so with that said, we're going to look at NQ here. Now, I'm going to just show you today, obviously we've had a really volatile market, and you have a couple choices. You either don't trade, you trade in sim, or you can always trade the micros. So, and then of course the other option is to trade fewer contracts. So you as the individual will have to make those determinations for yourself, okay? So I'm just going to go through a few of them here. So let me just go back. And you could do this on a 5-minute chart, a 15-minute chart, a 2-minute chart, a 3-minute chart, whatever you want, you guys. So ideally what I want to see is as price is breaking the super trend stop, I want to see that my green line, if I'm going to take this buy right here, I would want to see that my green line was already above the red or getting above the red as it's breaking that. So that would have to be a pass for me if I'm going to stick to my rules. Here, price breaking the super trend stop below, and you can see that I'm in overbought here, so that would be a pass for me. Now, one thing I neglected to tell you is that this black line that you see on here, I mentioned it on the black chart that we looked at, but this is that 30 EMA. And generally, when you're taking the entry on the 1-minute chart, or if you decide a 5-minute chart, 3-minute, whatever you guys decide, ideally, we'd like to be on the correct side of that 30 EMA. And if we're not, then you can use it as an area of possible support if you've got some distance. So this would be a good example of that. Price breaking the super trend stop. Technically, it's not valid because we're in overbought up here. That red line's above 80. But let's pretend that it was valid and we wanted to take it and we place our sell order a tick below or 2 ticks below that super trend stop. And we can see that 30 EMA is below us. So realistically, we can view that as the first possible area where price might react to that as a support area. So here you can see, and I'm just going to go back to the crosshair. So here you can see price breaking the super trend stop on the top side, right? So I could place my order above that area, tick or two. So let's say above that would be 55.75. So I can get in that at 55.75 because you can see I'm still in overbought here. And another great view here is that we've got our 40-point gapper here. So likely this is going to stall or bounce, right, to fill that space. So what I would do if I was taking this entry here, and this was at around 11:28 this morning, it's valid for the buy. So if I'm going to take that buy, what I would do is I would look over here to the left, and I would see this area here that was holding as resistance, and I would view that as the first possible area where price might get stuck. So if I'm looking at that and getting in at 55, it looks like 55 and a quarter, 55.50 area, I've got room basically up to that 62, 62.50 area. So I've got plenty of room to attempt that. Now, if I take that trade, what I would be doing, if I'm trading multiple contracts, then I can take the first target off up there and then have my stop, once the first target's hit, quickly move to a tick or two better than my entry. Or I could just get completely out up there. Or once price is attempting to break through that, then I can pull my stop to just under that area there. Now initially, I like to use areas of support or resistance as a stop or the opposite super trend stop. And in the instance of the volatility, because basically this indicator is based on an average true range as well as a few other components that are part of that indicator. So if I'm going to start out here at 55, 50, 55 and a quarter, my initial stop is going to be a tick or two under this super trend stop. Now that's really large, quite honestly, because of the range of the bars in this volatility. These bars have been ranging from size to 15 to 25 points, which that's pretty huge. So your option is trade off a smaller chart, which would allow you smaller stops, or you can use an area of just under support or just under resistance. So for example, if this was the bar that was getting me in here, for example, right here, once it closes, I can use a few ticks under this setup bar. The setup bar is going to be the bar that is breaking the super trend stop. So that would be the setup bar. And if I'm looking at this and I can see that I've got this area possibly created here of support, right in this area here, because you can see it holding as support. general area of support here, resistance here. So if I wanted to, I can use a few ticks under that 44.50 area as my initial stop. And then you can always fine tune it if you want to drill down to, let's say, a large tick chart like on NQ, like a 12 or 16 range chart, and put a super trend stop on there and use that to trail with. But in a volatile market, you're going to have to give it room. Otherwise, best to just pass on the trade or trade in sim. So here, yes, I do like divergence, and so you can use this just as easily as divergence. So let's say we were long, and right here you can see we've got higher highs on price here than here. While we look at our stochastic green line, look at this stochastic green line, you guys, and you can see that we've got a lower high here than here. So that's giving us a heads up that price is likely to pull back off of that resistance area. Super trend, when you view the recording, you'll see there's a link there that you can access, Gene, in the forum. Otherwise, just go to Ninja Forum and do a search for the super trend stop for NinjaTrader 8. And for range chart, Javier is asking, what size do I use? The market's going to dictate that. If the market's very fast on NQ, I like a 12 range or an 8 range, but in the current volatility, I've had to use a 16 range. And to be completely upfront with you guys, this week I've hardly taken any NQ trades. They've all been on YM and ES because they've been a little tamer. So, you know, the market, don't get boxed into just one size chart or looking at just one chart or just trading one instrument. Always have a backup. So if NQ is too crazy, go to YM or ES, or if NQ is too crazy, or let's say none of the indices are doing anything at all. You can look at CL. So be open to trade whatever is moving realistically. No, you can use this setup on anything. So any instrument, any platform, whatever you guys like, okay? And that's the beauty of charting, is that usually, you're going to be able to make it work straight across the board. All right, so moving on here. So right here, you can see breaking the super trend stop, right? And I'm just going to put a vertical line here so you can see right here. And if you look at my green stochastic line, it's below the red. The red's no longer an overbought. And this actually would have me getting in just under that 30 EMA. So I could go ahead and I could take that. And if I was looking at this, what I would do is I would just kind of see where we've had some price reaction. And so anytime price looks like it just turns around in the middle of nowhere, kind of like this candle here, I would just put a line there and just get an idea of where that was in the event that price struggles there again. And so you can see it's around, let's just say 30.50. So the entry on this bar here, if I'm going to just take it when it breaks the super trend stop, would have me getting in around 36.75 with 30.50 below if it gets stuck at 30.50. And so I could take that, and then once price gets through that 30.50, I can move my stop there, or I can wait for it hits the next till it hits the next target. Now, if you look over here to the left, you can see you've got this little consolidation area here. And the thing about support and resistance is that you're looking for common areas amongst multiple bars. Doesn't matter if it's the high or the low, the open and the close, but you can see here price holding as resistance, right? You could see it's trying, finally gets through. So on the way down, this being resistance would have to be our next support area. So going by this, we've got the 30.50, then we've got the 22.75. So I could use both of those as my target areas. Now, typically, the volume profile here is a little easier to look at, but because we have the volume that we've had, I'm just going to scrunch it up so you can see, it's hard to kind of pick out little volume node areas. So I'm going to show you that on another chart. But on most days, anywhere where you get these big volume nodes sticking out, those are likely areas where price is going to react. And if you have trouble looking at it on a 1-minute chart, like I said, don't be boxed into just one chart. If you can't see it on the 1-minute, look at it on the 5-minute. If you can't see where support and resistance areas are on the 5-minute, look at the 15-minute. So it's always, what can you see it on, right? So obviously, when we look at a 15-minute chart, much larger bars. So like, for example, let's just look at this bar right here. So what time is this? So this is 12:45 to 1 o'clock bar. And when you look at this bar, it's huge in size. It goes from 86.82 and a quarter all the way up to 87.66.25. So what's that, about 80 points? Okay, we know that a whole lot happened within that 80-point area, right? So looking, unless you're trading off a 15-minute chart, you really want to know what happened within that 80-point bar, right? So that's where, again, drilling down to something a little bit smaller is going to be helpful in determining those areas. And I'm not saying somebody couldn't trade off the 15-minute chart or somebody couldn't trade off the 5-minute chart. It's, again, whatever is best for you and your situation. And so if I was taking this trade here, I have a couple choices, right? I can see where I've got a high volume area, and I could put my stop. Like here, you can see this little volume area right here. It's not ideal, but I'm just going to draw a line here, and that's at, let's say, 53. And so if I wanted to start out with 53 as my initial stop, if I didn't want to start with it way up here above this super trend stop, I could use that as my initial stop, and then as price starts moving lower, then I can trail above each of these bars as they form and wait for my targets to get hit. That's what makes trading challenging, is there's no right or wrong way to do anything. So again, having so many choices sometimes makes it a little bit difficult to do the same repetitive entries and targets, etc. So that's why just practicing a little bit and finding what works best for you. Like if you think in the environment that you're trading in that you can trade NQ with a 2-point stop, you're wasting your money, honestly, because you're just going to get stopped out. So again, sometimes just using an arbitrary number as your stop is just not going to cut it. Now when the volatility is not there, you're trading something that's not so volatile, then yeah, you can get away with a tighter stop. So you have to be willing to adapt. Otherwise, you know, you can easily blow out your account. Tick charts, you're going to use 3, 3, and 3 for the super trend stop, and you'll see that in the replay. Okay, so here you can see price getting above the super trend right here, and there's that 30 EMA again. Notice though it is valid for the buy, so with that 30 EMA there, I'm going to pass on it realistically unless I had room up to that 30 EMA. Now if you don't want to use the 30 EMA, don't use it. So even without using that, if you look over here to the left, you can see you've got this little area where price has been struggling, right? And so if I was taking that trade, I would just say to myself, okay, price was struggling in this area of 62.75 previously, so if I take this trade, I have to be willing to either get out at that 62.75 if price can't get through it, or get out at break even. And then when you're in that trade and you can see it hitting this resistance and you see that 40-point gapper popping in here, that's a good heads up that price is probably going to stall up there or pull back to fill that space. Now, one thing I want to point out, and then I want to look at a couple bigger charts so I can show you the volume profile, is, let me find one here, as price is hitting and hitting and hitting a super trend stop. So let me just find one here. All right, here's one. Okay, right here. This is pre-market, you guys, but I want to show you with this super trend and it not getting above here. You can see it trying and trying and trying and trying. All while it's trying, I want to point out that it's not valid because it's in oversold down here, right? Once it comes out of oversold and that super trend stop is still there, because remember that super trend is going to remain there until price closes above it. So all these attempts at getting through it never closed, price never closed above it, so that's why it's still there. So if I wanted to take this, then I could. Now, again, what would go through my head is I've got that 30 EMA there right above my head. I got my 40-point gapper. And again, this is pre-market, you guys, so a little bit different environment pre-market. But also what would go through my head if I was looking at this to take it is I can see this area, it's been struggling, right? So you could see that by the time it does get in line here to be valid, we still have the opportunity. So you absolutely could decide to do that. Here you could see price breaking below the super trend stop here. And I would put my sell order in a tick below or 2 ticks below the super trend stop. I'm not in overbought. Technically, the short is valid. So just like before, where was price reacting, right? We got this area of resistance, that area that was resistance becomes support. And so that would be the area where I would look for the first reaction. Then if I'm looking over here, I'm going to just draw another line. You can see this little area here of support. So what would be going through my head is if it gets through this 87.02 and change, then the next area is this 95, and then the next area is the area here at 88.75, and then I would be looking down around this area here. One thing to remember, generally speaking, of course, you know, there's no such thing as always in trading, right? Because the market will do whatever it wants. But generally speaking, whatever price has done the last time in this area when you look to the left is generally what you can expect the next time it gets there. Okay? So let me just scroll ahead here. So I'm going to just show you on the 5-minute. Now you can do the same thing on the 5-minute. You're going to have fewer opportunities on the 5-minute than you will on the 1, just like trading off a range chart with those settings for the super trend stop of 3, 3, and 3. You're going to have more opportunities on that chart than you will on a 1-minute chart. So what I do is I'll have them both up, and sometimes I get an opportunity on the range chart that I won't get on the 1-minute chart. Sometimes I get an opportunity on the 1-minute chart that I won't get on the range chart. So when we get the 40-point gapper here, Kevin, and I'll show you on the 1-minute chart, but generally what you're going to find is that price will generally stall while this space fills, or whatever direction the green line has to move toward the red to fill that space, that's generally the direction price will go. And again, don't take my word for anything. Check it out yourself, you guys. And if you're looking at it on a range chart, you'll find that these will fill faster. And if it's a very fast market, I'm not saying the red line can't find its way to the green line, because the bars are forming much faster on a range or a tick chart. But if it is a very fast environment, you'll find that it'll go sideways for a few bars to fill that space. And like I said, Gordon's indicator, I'm just going to show you real quick. If you go to my site, Easy Emini Trade, and you just go up here to Gordon's NinjaTrader 8 indicators, you'll see this NinjaTrader 8 Stochastics. These are the two indicators. One marks longs, shorts, longs OB, and shorts OS, longs because it's overbought, shorts because it's an oversold. And then this one here, right here, will mark the 40-point gappers. And then there's the legend there. So if you want to check it out, you can, you guys. He sells them for very inexpensive prices. And so, again, just check him out. He does a great job with it. And it's, honestly, I call them Gordon's handy-dandy indicators because it makes me be able to be lazy. And so here, you're going to see this says short. And this is always going to give you the present condition. So if I were to slide back and look at anything, this doesn't change. It's always giving you the present condition, okay? And so, like I said, you can easily spot when you're getting this space. You don't need the indicators of Gordon's to recognize those. Like I said, it just allows me to be a little on the lazy side. And again, whatever is easiest for you guys that helps you to pull the trigger and that you can find beneficial, that's what's going to work the best. Because what works the best for me isn't going to be what works the best for you. Okay, so I do want to show you a couple things before I start taking some questions. But like I said, you could do the same setup on the 5-minute chart. Nothing would be different. except obviously the size stop. It's easy.eminitrade.com. And then I've got an ebook package here, and you guys can check it out. You're going to have a discount code of Ninja, and it'll give you 15% off if you decide to get the ebook package. So you guys just check that out on your own, okay, if you don't mind, because I really would like to give you as much information as I can. And then the green dots on here, again, go to the website and it'll give you the legend, but this is giving me a heads up that I've got a 40-point gapper where I get those green dots and a price. The bar has changed directions. And then we call this the little dipsy doodle here, where the green stochastic comes down, almost kisses the red. And in a typical environment, you can use that as a pullback opportunity. But just like with the 1-minute chart, you can take the entries off the 5-minute. Same way, breaks above the super trend stop right here, and you can see green line above the red, and you can buy it. Obviously, you're going to need a bigger stop. Here, as it's breaking the super trend stop below, not valid, right, because the green line's still above the red, so that's a pass. Here, breaking, not valid, because we're in overbought, and you can see by the time it gets below, it does come in line. So if you wanted to take that, you could. And once again, what would go through your head is that 30 EMA is right below me, so I have to be aware that price could react there. And then if it can get through, here's your next support right here. And then if it can get through there, then you're looking your next support right here, right? Because you can just look for common areas. You can see here the common area at the 49 because you've got the low of these bars here, you've got the high of this bar here. So always looking to the left. And then what I'll do is I'll keep my 1-minute chart up and I'll move those support resistance lines around as they are created intraday. And again, not because I'm not willing to take trades, but because I want to have a pretty good idea of what I can use as a target based on support or resistance and decide if I even want to take the trade. Because if there's not enough room, then I can pass. You're always going to have another opportunity. And in this volatility, if that's one thing that I can stress to you guys, is don't chase the market, because you might get lucky, but just don't jump in. Just have a reason that you're taking the trade, no matter what your setup is that you're trading. So this way you know why you're getting in, and you can repeat it over and over and over again. And that's how you become a successful trader, is you find a couple setups that work for you, and you just keep doing the same thing whenever you see the setup occur. Okay, so what I want to show you is I have a 60-minute chart here, you guys, and it doesn't matter what size you put it on, what size chart, but what I've got is the volume profile on here for the whole week. So as every day happens, this volume profile is adding for the whole week. So now tomorrow, when tomorrow we open, well, tonight we open, this will still be in play because, like I said, this is for the whole week. And so what this is helpful in is anywhere you see these big volume nodes here, where you see this big filled in area, that's telling you that price is likely going to struggle there. And so if you're somebody who has a hard time marking or knowing support and resistance, you can just kind of take a look at that, or even on your 15-minute, whatever chart you want to put it on, it does not matter, you guys, but just kind of get an idea of where you're getting those big volume nodes sticking out, where you've got the highest concentration of volume, and mark them. And then you can kind of look at the areas on the price bars and see what they look like, and see if you want to fine tune them. So a little hard maybe to see on the 60-minute. So let me just change this to a 15, and you can see those areas where I mark those lines just based on that volume. Can you see how those are definitely support and resistance areas? And if I break it down to a 5-minute, you can see the same thing. And then if you need to fine tune it, you can. But you can see in all the areas we put those lines, they are relevant as support and resistance. So I urge you guys to implement the volume profile whenever you're in doubt of what you can use as your support and resistance areas. And like I said, on the intraday charts, like for the the 1 minute, I'll just keep that up and I will just move them around all day long as the areas are being either retested and holding, or I might need to adjust them a little bit. Now, this is YM, and you can do the same setup on YM, you guys, and I know it's almost time to start taking questions, but same setup on YM, same setup on ES, same setup on CL. It's not going to matter, you guys. And as always, we're support and resistance. Now, real quick, I want to just show you a little trick here on the daily chart, and then we'll start taking some questions. And maybe I don't have my daily open here. Let's see. I don't. But if, and I can do it on here. So let me just put it up on here, the 15-minute chart. If you're using the order flow volume profile, like you've got the capability because you've got the lifetime license. And so let's say I want to see what happened just in this area right here. And you can do it on the daily. You can go up here to your drawing tools and choose the order flow volume profile, and then just click on the bar that you want to start on, and I'm just going to go to this bar right here. So this is going to give me the volume profile based on just using starting this bar over here to this bar. So in looking at this pretty easily, you know, you can see that here would be some higher volume areas, and so those would be areas that you're generally going to be looking for a possible price reaction. And you can kind of fine tune it, like where the start of that volume node begins and where you've got these little openings between each volume node. And very often you'll find that if you have a nice opening between one high volume node to another, that price can easily get sucked down to the next high volume node or sucked up to the next high volume node. Okay, so let me take some questions. Yeah, I've been trading this setup for many years, Nino. So mainly off a range chart using the 333 settings on the super trend stop. But on the 1 minute chart for at least, I'm going to say about 3 years ago when we got such huge volatility. I don't know if you guys remember that or not, but that's when I developed the 1 minute setup because I was getting frustrated trying to get in on the range chart. Yeah, you can use floor trader pivots, and so basically it's just another way of giving you a heads up where support and resistance areas are. So those areas that we talked about in the beginning that I like on my chart, all these are areas where price is likely to react. So floor trader pivots, previous day's high, low, and close, the 50% fib retracement area, and any longer period moving average, generally price will react there. There are many, let's see, MJ saying there are many super trend stop options on NinjaTrader. When you view the recording, you'll see that I went over the settings. So here are the settings that I'm using, MJ. I wouldn't use a small EMA, Oksana, but if you prefer a small one, because the idea with the larger moving averages is that it's taking, so for example, the 200 period moving average is looking back at the last 200 periods, so that's going to be more relevant as a support and resistance area as opposed to using a 3 or an 8 EMA because it's only taking into account the last 3 periods or the last 8 periods. Let's see, Mark's asking, do you ever use the footprint bars? I like a footprint chart. I use a footprint chart. The thing about the footprint that most people have a misconception about is that it's the holy grail, and it's not, you guys. It moves so fast, and realistically, in my opinion, the footprint chart is only relevant at areas of support and resistance in looking for price to break through it. And if somebody says that they're able to trade strictly off of a footprint chart without using any other charts, I would have to say they'd have to prove it to me. The my education chat room is open Monday through Thursday, 9:15 to 11:30 for EG. And just like with this 40-point gapper, if we have a sideways market or if price were moving strongly in a direction, I was looking for a pullback. So let's just pretend here, I know this is the end of the day up here on this 1-minute chart, but if price is trading up to a resistance area and I wanted to short off there, I can use divergence to short off resistance, or I can use this 40-point gapper off of resistance to give me a heads up that, hey, we're hitting resistance, and if you want to take that, this is telling me it's going to go sideways or pull back. So again, with that 40-point gapper, you can use that to your advantage at support and resistance areas. Like I said earlier, in a quieter market, I would be very cautious about anticipating support resistance areas to hold to the tick, because you can see that today and this week and last week, you can be in a support or resistance area, but it slides through by 5 or 6 points. Okay, so I got 3 minutes left, you guys. Stochastics are part of Gordon's. These stochastics are, you'll notice when you review the webinar recording that I gave you the settings for the 2 stochastics, so you can just use 2 plain old stochastics and put them on your chart. Gordon's indicators are going to do the work for you, and you'll go to my site, Gordon's NinjaTrader 8 indicators, go to NinjaTrader 8 stochastics, and they're 2 separate stochastics. This one here, the Gordon's Easy Stochastics indicator, will actually put the 2 stochastics on your chart, and this is the one that will mark the 40-point gapper, but this one here is the one that will mark the longs and shorts, etc. If you only get the one up here, this Easy Stochastic Signal Indicator, you'll have to just plot your 2 stochastics by hand on there and then just put this indicator in the same panel. And the instructions are on the download page if that's something that you choose to purchase. And the long shorts are going to be the reason why we're taking the trade, right? Green line below the red, it's going to say shorts. Green line above the red is going to say longs. If the red line's above 80, it's going to say longs OB. And if the red line is under 20, it's going to say shorts OS for oversold. It sounds like I'm underwater. Yeah, and it's easy Emini trade. And if you go there, you can click the contact info, easyemintrade.com, and contact, and you can fill that out, and that'll send me an email, whoever was asking me that. Oh, I sound good. Okay, sorry. No, the indicators are only for NinjaTrader 8 at this point, Didar. And Ninja will be recording it, and Tiffany said that you guys will get an email letting you know when the recording is ready. Actually, things have worked out really well this week. It's required some bigger stops. And again, I don't ever want anybody to take my word for anything. Go back, mark the settings, set up your charts, mark the entries, and then go back and tally them up yourself. The win ratio is going to be dependent on obviously what you're using as a target. Somebody shooting for, let's say, a 40-point target is not going to have the same win ratio as somebody, let's say, shooting for a 6-point target. I'm not a fan of automated personally. Automated systems work fine as long as you, the trader, know when to shut them off. Yeah, you have to go to the forum. Go to NinjaTrader forum, and you can search for the super trend stop there. And yes, you can use a setup to trade the micros. You can use it to trade gold, crude, 6E. You can use it to trade the Forex. And you guys, if you want to shoot me an email, I'm going to type it in here. Trisha at easyemintrade.com. Trisha at easyemintrade.com. Okay, so there's my email, you guys. Oops, I think I sent it. I didn't send it to all you guys. Sorry. Let me try that again. Okay, there it is. Yeah, I don't trade the micros, so I'm not the person to ask if the volume is good there, but I would suspect that with the current volatility, there are more and more people trading the micros. CL, I like a 4 range, Mitch. And you can 4 range with the settings of 3, 3, and 3 for the super trend stop. And if you find the market's fast, use something bigger. Kevin says, I'm interested in hearing more about when to turn a trading system off. Basically, sideways is what gets automated systems in trouble. As long as the market is trending and taking trades, it's going to usually do well. But when the market is chopping around sideways, it usually takes it all back. So if you see the market is chopping sideways, that's when you'll turn off your automated system.
Hi, Trisha. I am so sorry to interrupt. We're actually going to have to wrap up this event.
That sounds good.
Perfect. Trisha went ahead and put in her email into the chat window. Go ahead and email her with any questions. I assume that's okay, Trisha?
Yes, it absolutely is.
Perfect. Perfect. Well, I'm going to end this event here now. So I would like to start off by giving a thank you to Trisha of Emini Trade for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event, so just keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. So if you find value in these events, we hope you will attend them on a regular basis. We would like to remind you the information provided in this was of Emini Trade and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem, and thank you again so much, Trisha.
Thank you, guys. Thank you, everybody, for attending. Have a great weekend.